Hello everybody, Stewart Heath here, founder and CEO of Harvard Grace Capital, with another episode of our series, 100 Questions You Should Be Asking Your Investment Sponsor. We are in the section called Tax and Financial. We've done many of these episodes before, so if this is your first one, be sure to check out all the rest of them. And coming to the end of the Tax and Financial section, which will leave the legal section next. So I think the last question in the previous episode was, will there be a cost segregation study done? And if it's a real estate deal, the answer better be yes. And then you want to say, okay, how are you going to split up and allocate the bonus depreciation amongst all the investors, between the sponsor, the investor class, and whatnot. You also want to find out and ask questions, how will my income be reported to me? Usually, if it's an LLC or an LP, you're going to get a K1, which is your share of an investment from a pass-through entity. Depending on the other structure, you might get a 1099. Could be a 1099 INT for interest or a 1099 dividend, DIV. But you need to understand, because that's how you and your tax preparer can do your own tax planning as to how what character of the income is coming towards you. Would this investment force you to file in other states that you perhaps don't live in? The answer is maybe. Depending on the state and depending on the type of investment. Can you invest through an IRA, a self-directed IRA, or a solo 401k? And if so, will there be unrelated business taxable income inside that vehicle? Those are complex issues, but something that you need to know. And I think doing passive investments through these retirement plans is a great way to go. And if that's the case, and you're not going to benefit from depreciation, do you have an asset class where you perhaps make a little bit more of the profits while somebody else gets the depreciation that would have been allocable to you? So, and the last one for today, how is the debt? How does the debt stand up with part of the whole capital stack? You want to make sure that there's not too much debt, or really not too little either, because debt is a wonderful tool that can just be misused. You want to make sure that there's a proper ratio between equity and debt in everything that you're doing. So there'll be one more episode of Tax and Financial, then we're going to move into legal questions. So everybody chime in here. We'd love to hear from you, and because we just want to help.